Hi, this is Rony Mullick, and you are watching the pre-market show. And we know that the US markets fell yesterday, and what happened is the markets were looking bearish because of the German producer price inflation data, which came on Friday 11 o'clock, and the market started falling globally after that news. So right now, if you look at SGX Nifty, it is indicating slightly positive. Not positive. I mean, the low, if you see, it is at 17,630. So from there, the markets are recovering steadily. Now it is 17,692. This is purely because of the Chinese market. So if you look at Chinese market, it has been going higher. The reason is they have cut down their loan prime rates, and that is why the Chinese markets are reacting positively. It is already up 1.26 percentage, and this is bringing the other markets up. So if you look at Korean markets, although it is down by 0.7 percentage, it opened with a huge gap down, but now it is trying to recover. Same thing with Japanese market, opened with a gap down, trying to recover. Now it is at 0.43 percentage, and Hong Kong market, although it opened with a gap down, it was already trading in the positive territory by 0.22 percentage. So Asian markets are looking positive. If you look at the US futures are also looking to stabilize. So it is also moving up. That is good to see, but still they are in the red by 0.2, 0.3 percentage. So it is the Chinese markets that is bringing the global markets up. So let us see where and how long it will uh, continue. So that is to be seen. Apart from that, crude oil prices remain at $89 per barrel. So nothing has changed over there. Dollar index has slightly come down, but that is again very insignificant. It is at 108.117. So if you open up the 15-minute chart, you will be seeing that the dollar index is slightly cooling down, but it has to come down below 107, 106, so that we can get some kind of confirmation, because we always know a weak dollar, a higher dollar index means that equity markets are going to be weak. So that is what we have to see, that if dollar index is coming down, that is positive for the markets. Otherwise, there can be weakness in the markets going forward. SGX Nifty is trading at very close to 70,700. That indicates a gap down opening of around 50 to 60 points in our market. But the thing that we have to see is the 5 days fall was uh, quite significant, and as we have already discussed, that a correction was imminent, and finally the correction came on Friday. The question is now that will this correction continue, or will we have a consolidation period, or maybe a trend reversal from here? That is to be seen. So the expected range for today in case of Nifty, I'd say that definitely Friday broke, it came and closed almost near the day's low. So today the levels to watch out is for on the downside 17,630 and 17,600. So these are the levels you can expect the market to take support and reverse. If that is not the case, if the markets is falling continuously and it is closing below 17,600, then we will definitely turn bearish in the short term. But if the market manages to trade between the range of 17,600 to 17,800, then we can expect consolidation in the coming days. So that is fine for the markets, and only if 17,900 is broken and the market moves up, then we can expect that the trend will continue. But the chances of that happening is very unlikely, because the VIX is high, the expiry month is also near, huge amounts of call has been written, and also the global cues are not that favorable. So overall, we can rule out a bullish momentum. We can expect consolidation or more correction from here. Coming to Bank Nifty, Bank Nifty was showing even more weakness. It fell almost 670 points the previous day, and for Bank Nifty, we will be looking out. This is a 15-minute chart. So definitely Bank Nifty also ended near the weakest point. So going forward, say 38,600 is what you can look out. 38,670 is where the market can take support. If that is being broken, then we can see a gap is pending in Bank Nifty. So markets can come for gap filling around 38,300 to 400 levels, and that could be the next support. But if that is also broken, then the last level of support I will be looking is 38,000. If that is broken, we will definitely turn bearish in the short term. And if the market manages to trade between 38,500 and 39,000, then we can expect consolidation in the coming days. And only if 39,500 is broken on the upside, we can expect that the trend to continue on the higher side, but the chances of that is very low, as we have already discussed. And SGX Nifty is already above 17,700, so things are looking positive, but don't keep your hopes up. So in case the levels I've talked about, if you are holding positions, if based on those, you can take the view of the coming days in the market. So only good thing in the market right now is that in the Indian markets, the foreign institutional investors have continuously bought for the last 2 weeks, and if that continues, we can expect a cushion when the markets are falling. So that is definitely going to play out a major role in the markets, because the fall will not be that drastic or that severe, because FIIs continue to become net buyers. So let's see if this week also they turn into buyers, and if that is the case, then we can expect the markets to consolidate, and maybe in a few weeks time we can again move higher. That is to be seen. So until that time, let's see what the markets do today, because today's trade will at least define the trend for the at least this week. So we have to closely monitor today's trading, and I'll again join you for the post market show. Until that time, have a good day, and thank you for watching.